All right, guys, welcome to today's live stream. So we had a bit of a technical issue there. That's why we started late, but I thought I'd cut it off and start it on time. Anyway, so today what we're going to be covering is the coronavirus job support scheme and the changes to that. And will they solve the unemployment issue? You know, GDP, house prices, London house prices. What I really want to do is I want to get across just how important I think it is that unemployment is, but also to look into the future and see what the next 4 years have. So today is all about the next 4 years that I think for house prices and for the economy through GDP and things like that. And so I've gone out and got some studies and got some research and that sort of thing. So we can actually look at that today, because if you can get a sense for what that really means, it'll give you a lot more confidence about what we're at. And then we'll look at negative interest rates. There's a lot of talk about that from the Bank of England even, which is pretty interesting. Will that actually transpose to helping you guys out and helping investors out? What does it mean for you guys? And I think, fancy becoming a bricklayer, we'll talk a bit about Brexit and the effects that I think Brexit has had on bricklaying. Which is an interesting one. But also, could Brexit, because now Brexit's back on the agenda, could it cause a drawn-out recession? Okay, and we'll look at that too. So let's have a look at our recession watch. So I think the big thing with the recession watch, there's lots of opinions, and I think the problem with all these opinions is, who do you believe? What do you do? Do you actually, yes, this is definitely going to happen. What's going to happen? You really don't know, because there's so much out there, so much stuff that's getting bombarded, so many opinions. You've got, international people looking in at the UK and looking in at the US and looking in around and saying, this is what's going to happen. And actually today we'll look into some experts and what they're predicting and just seeing how wrong or right they got it. In most cases wrong, by the way. I don't think anyone really predicted coronavirus. But we'll see. So great, let's get into it. So look, furlough scheme, and I think, actually it's called the job support scheme. Okay, so furlough was, and now it's the job support, but effectively it's the furlough. 1st of November through to 30th of April. So you've got 6 months where you can effectively, the government will pay at a lot lower rate. Okay, so effectively for the first 3 months, and after 3 months they'll review it and they may change it. So the staff have to work a third of the time. Okay. And then for the other part of it, the government will pay a third, and the employer will pay a third, and effectively the employee will have to subsidise a third. So they won't get their full wage. So now it's capped at $600 or $700, $697 a month. So it's a lot less than 2.5. So will this scheme really work? And I think what they're doing is they're trying to get the higher end payers back, or made a decision on those. We'll see. I think it's a good scheme. I think as long as a business can use it, and it gives that little bit of support, but not enough support to actually make everything go away. And I think as long as it does that, then actually that's a good thing. Look, the government is doing the right things from my perspective. And so far, I don't think they've really put a foot wrong. On dealing with the coronavirus, the actual virus side, I think, there's lots to be said about that. But in terms of the economy and how to stimulate economy and keep an economy going, actually I'm pretty impressed with that. So, tick to them so far in my books. And if the last 4 or 5, actually last decade, I've been pretty critical of everyone. Yeah, not just Labor, not just the coalition, but everybody, because really it just seemed like they're out there feathering their own nest, making silly decisions and not doing what they needed to do. But it's a good scheme, I think, and we'll see how it comes out. So let's have a look at GDP, so gross domestic product, which is effectively the production of a country. Now, the interesting thing with this is Euromonitor International. Okay, so it's a report by them. I pulled a bit of stats off there because I liked their approach to it. It's a whole big 80-page or something report. Looking at what their forecasts and what their predictions are. Now, the problem with all this is that you can go to 10 different sources and get 10 different answers. But I love these fan diagrams whereby they say, this is one option, this is the next, this is the next, and this is the next. Because I find the experts that say, this is what will happen, get it wrong. Yeah, and get it wrong. Most experts are wrong most of the time, as I say. But I think this one, the good thing about this, and here's the thing to look at. That dotted line is the pre-COVID. Yeah, the baseline, which is what I actually think will happen. Okay, so the baseline is the green one, and then you've got pessimistic 1, 2, and 3. So they've actually given 3 pessimistic cases. I often find that the worst case never happens, okay, or very rarely happens, okay. But for me, that the green line there is the one that I would be looking at on a think question. Now, what that means is, if you have a look, it's pretty simple to, and that's what I like about this. Obviously 2020 drop, massive drop. 2021, we're back to where we started before COVID. Yeah. 2022, for the next one down, the pessimistic one, is we're back to where before Corona started. 2023 is pessimistic 2, and 2024 is pessimistic 2 and pessimistic 3. Okay, so that's really the scope. So worst case scenario in this scenario is we're growing, but we're not back to where we were until 2024. Okay, but the good thing is that we're not dropping much further. If you look middle of 2021, we drop until then, but then we pick up from there, which that pretty much I think fits well with most models. And most people are saying, look, winter's going to be a slow winter, and probably for the first half, H1 of next year will be pretty slow because we're going to lay off a heap of people, and then it'll have to correct, and then we'll start adding people back, which is what I think is going to happen. Okay, cool. So inflation forecasts, okay, because we're going to look at inflation forecasts because this really determines what the interest rates are going to be. Obviously, that 2% target, if we go above that 2% target, then that's when we run into problems. Well, not run into problems, but that's when we need to raise interest rates. So if you have a look here at the UK, I'm not really worried about anyone else. There's lots of figures there, but the UK here, okay, you can see 0.8, 1.2, 1.7, 2. So if you 23 to 27, so this is going out to 27, the average is 2%, which means barely any inflation, which means barely any interest rate rises. Now, we'll have a look at another one where we do actually see the interest rate rises and what's likely to happen. But I think that's important. So the fact that all this money is being dumped into the economy doesn't necessarily mean that we're going to see huge interest rate rises. So people are saying, massive inflation and watch the sting in the tail and all that. Right now, there's very few people predicting that. Yeah, because the drop was so low. And actually, my bigger picture theory, and I mentioned this last week, is that in actual fact, I think the US has been just printing money. And everyone's been sitting there going, that's because they're the reserve economy, yeah, or the reserve currency. But now what's happening is everyone's got addicted to the drug. So now everybody that can print money is printing money. And this is one of the problems with the Eurozone. Whenever you look at the Eurozone data, it's terrible because they can't control, it's almost like an external body controls that for everybody. Yeah. But anyway, we won't get into Euro because that's a basket case, and let's face it, we're no longer part of the Euro. So yeah, but I do think, and if you look at this, the central bank interest rate forecasts, okay, what we're talking about there, the top graph is the US and Eurozone. You can see that really we're into 2023 before any interest rates, central bank interest rates are going to rise. Yeah, and if you look down the bottom, UK, Japan, that orange bar is the UK, and what that's effectively saying is the same thing. 2023 before we start to see interest rates growing, but if you look, they're only growing by 1% out to the end of 24. So interest rates realistically right now seem to be off the market, off the equation, which is good news if you're getting really good interest rate now on your mortgage, but it also means you can probably buy it, and even if prices drop a little bit, and we'll have a look at that in a sec, the likelihood is they've got time to come back while your interest rate is still low. So affordability shouldn't be too much of a problem. Now, all of this, needs a great big asterisk to say, who the hell knows what happens? If we go into a second lockdown, if we have a hard Brexit, if we can't get deals, trade deals, if we can't, if we go into a third lockdown, if we don't find a vaccine, if we end up all wearing masks, all our lives, all these sort of things. But they're the worst case scenarios, and they're the things that I tend, if people start rattling that stuff off, really, that's not how life works. In all my years, I find it's realistic worst case is what you actually pitch for, okay? Yeah, so I think it's really, really interesting. By the way, guys, any questions you've got, yeah, just pump them into the thing, and I'll be sure to put them on the screen and answer them as best I can, providing they're to do with this today, But yeah, but anyway, if not, if I don't get to your question today, then by all means, I will I'll get back to you and record another video. But the other side is, if you want to send an email, at any stage, if you're watching this after the live stream, then just set it to webinars@gladfish.com, and I'm more than happy to record something and I'll publish it and put it up there. Okay, good. So let's look at global real GDP. Okay, so this is the baseline forecast. Yeah, okay, fine. Don't get the complexities in here. All we're looking at here is the advanced economies. Okay, so if we look there, what we're going to see is that actually the orange one is 2020, which is this year. 2021 is the maroon, and the purple, which is 2021, 2022. Okay, so these are both predicted to have growth. Yeah, which means yes, things may drop off, but actually they're likely to come back. And so these sort of things, this is good news. It means that actually, and as I looked around, I was quite surprised. The worst case scenario I can find for house prices, which has become typical, is the Bank of England. Okay, and normally they do a fan, and people publish the fan, the bottom of the fan. That's 16% drop. Okay, so that's where, if you like, the worst case for house prices. But actually, nobody's really predicting 30% drops and all that sort of stuff. I know there's headlines coming out saying it's going to be as worse as the Great Depression and things like that. But I think a lot of that commentary is more about the share market and the potential that could happen there. And a lot of that is, that's gaining column inches. It's not necessarily, in fact. So actually, most people are saying, it's not going to be beautiful next, for the first 6 months of next year. And we're on a sort of downward, incremental down now, and it'll probably continue for the first 6 months. But then things will turn around. And that's what most people, I've never seen such a close-knit predictions, which is actually either a really good thing or it's something that we're totally missing out, and all the experts are just focused on I don't know, la la land, so it may well be that. We'll see. Look guys, I think one of the interesting things here is that we've got to look at this, and as investors, we've got to say, how does this impact our own portfolios? And I think that's one of the keys here. If you can work out how does it affect my portfolio, meaning I've got 5 properties now, I'm looking to buy my first property, or I've got properties in these specific areas. Get local. Don't read this data and say, oh, that's what's going to happen to my portfolio. Get local with your data, yeah, and work out what that means for that, all right? Okay, so how badly will coronavirus hit UK house prices in 2020? These are the predictions, okay? So Bank of England, -16, worst, yeah? CBR, it's economics, business, blah. Anyway, fall 13%, you've got 5 to 10, you've got 7%, you've got 5 to 10%, you've got a fall of, so these are all falls, okay? These are predicted for this year. Now, Santander, -6%. Barclays, a rise of 0.06, okay? Savills, -2. Now, interestingly with this, okay, this is what they're predicting now will happen. Now, obviously, all of these have been totally blown out, and now we're looking to have 2% growth, yeah, which is quite interesting. So, it just shows you most experts are wrong most of the time. Now, a lot of these guys are going to say, but hold on, we did this before coronavirus, we did this, blah, 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 and we said this is a condition. I'm not worried about that. This is all headlines. So, yeah, okay, it's not the exact detailed thing that they're saying, but just be aware, that when you read that headline that says 16% drop, prices will fall, that is not necessarily going to happen. That is an opinion, and generally you find with these opinions is they're focused at, getting column inches, getting media, okay? So what's my predictions, and what was my predictions in this over this period too? Now, if you have a look at this is from a webinar slide that that we run, and basically this is from 2018. Interesting, isn't it? 2018, I'd made these predictions, which was basically 2020, London's not going to be doing a lot. 2021, London's not going to be doing a lot. 2022, 23, 24. Interestingly, that mirrors a lot of the data that we're seeing now and that I'm showing you. And I did this in 2018. What's the red star, you ask? The red star is the fact that I felt that there would be a recession start about then. And the reason I said that was because I thought Trump would get back in, okay, in America. And what happens is 6 months after, he would lose interest because he's got his second term. He's done everything he needs to do. He's paid off whoever he needs to pay off. He's probably got rid of his 300 million of loans by bribes, and who knows what else he's doing, that's illegal, but he seems to not care about any of that sort of stuff. And 6 months after he gets re-elected, lose interest and the economy falls into recession. That was my prediction, okay? And that's I've said this on a few videos and that over the time. The reality is I haven't needed to change that too much. Now major cities you'll see similar, but they lag behind the London and commuter towns, and the UK suburbs. My concern is there's not a lot happening there whatsoever. Okay, so let's look at the house price predictions 20 to 24. Okay, and actually it's got 19 and 20 there. All right, so you can see what was now these weren't forecast, these are actual. Yeah, and then the F is the forecast 20 through 20. If you have a look, a 4-year forecast from 20 to 23. All right. You're seeing 6%, 5%, 6, 4s, 11s, 10s, So actually, you're seeing quite a bit of growth over the 4 years. So if you're buying now, or if you're buying the next 6 months, or if you just bought, even though prices may drop, the likelihood is things are going to come back, which is quite interesting. Now, what's my house price prediction for 2021? I think actually it's going to end up -3. Now, I'll qualify it with this. All right, I think we will see some drops. I think, to be fair, we're in the middle of the worst recession ever. So I think there's a lot of optimism. There's a lot of people who say, you know what? No, it's great, it's fantastic. There's all this pent up demand and all that sort of stuff. I agree, and this could change if the government, continues stamp duty and does a lot of things like that. But unfortunately, I just don't see that there's, it's a big country, and I see that actually some areas. Like I think London will start to come back because it's always the first to bounce back. So I think by middle of next year we'll start bouncing back and could see some house price growth. I think in commuter towns, I think in major cities, and then you got to look in the major cities because certain areas in the major cities probably won't because they've had a lot of growth. So actually when you factor in all these things, that's what I think will be the average. But you know what? Don't listen to my average. Get local and work out what your area is likely to do. If you're not sure, then speak to the team, speak to my team and ask them, what do you think is going to happen in XYZ, this area? What are your feelings about fundamentals? In my rant later on, I'll talk about the fundamentals and why it's so important to understand that in depth. And when you understand that in depth and you research that in depth and when you do all that in depth, actually you get a lot of certainty around that, okay? So that's my house price prediction. What do I think for London? I mean, look, I do think London has the best fundamentals. So there's no doubt about that. The way I look at that, it really does have the best fundamentals. And for me, it says, this is just a headline, prices tipped to rise, forecast to defy lockdown and fears of COVID second wave with a 2.5% growth, Look, there's plenty of this, some postcodes are weakest markets, King's Cross, Marylebone, Mayfair, Covent Garden. These are all areas which have had some pretty decent, times. So it's usual for them to slow down, and to not grow. And if you think about it, a lot of those areas too are really central. So a lot of people aren't working in the cities now, that sort of thing. So there's a lot of fundamental changes happening in London, but I still think it is the best fundamentals, bar none. And then the ripple effect will take out from out there, okay? So that's my take on it. Guys, as I mentioned before, any questions? Now I just realized, actually, I'm very sorry if you've been sending questions. I just realised that the live stream, the way I've done it, because I'm going out to Facebooks and all that sort of stuff, is that I'm not actually getting the questions right now. So I need to just, let me see if I've got any on that. Sorry about that, guys. So we have got a question right there. Happened in Scotland property market. Oh, okay. Now I can't add that. So I've just had a question on YouTube from, is it Michaela? Michaela. So what do I think happened in Scotland? Look, Scotland is, I'm actually 27% Scottish, I think now, which, But anyway, what do I think is going to happen to the market? It's a very different market in Scotland, okay? It's a smaller market. There's some fundamental changes, namely oil and gas with all the issues there and that. I know Aberdeen, I know a few of those places, house prices have dropped considerably. So it depends on how that's reacted. I don't really follow the Scottish market in that much detail to be able to give you really good advice on that. What I suggest is you find some Scottish local property guys who actually keep track of that. The general stuff I hear, but for me, look, I love Edinburgh. I think it's fantastic. but as a property market, it's a bit like central London. Yeah, Glasgow, lots of opportunity, but for me, it's not somewhere I don't invest in Scotland because there's different rules. I stick to realistically UK is where my, if you like, my stomping ground is. Sorry I can't be more focused or more help on that. But I think, if you get local, look, I think there's lots, as always, there is opportunities everywhere, and I think that's one of the keys here. If you can see the opportunity and you can basically choose the strategy to meet the market, then you can make money. And look, I'm not saying you're going to make money overnight like that and buy and flip and all this sort of stuff. I think it'll be a very different market, over the next 2 years and really 4 years probably before we get back into like big growth again potentially. But we may not get back into big growth, and one of the reasons is with interest rates so low and with pension funds, scrambling to find money to basically look after people's pensions and all the issues that's going to create. There's a real push to put people out of property investment, small landlords, and into more pension-based investments. And I think that can be its own problem, okay? But yes, so anyway, look, mortgage approvals rise sharply in a rush to escape Britain's cities. It's like, what? Now, okay, mortgage approvals rise 100%, yeah? There's been a lot of property sales made, a lot of activity, and that activity is actually working its way through the funnel. The problem is the lenders are only running on limited staff. They haven't got hundreds of underwriters on yet because, let's face it, we come out of 10 years of austerity, place on top Brexit, and that's kind of the market that we're coming from, and all of a sudden there's been boom, yeah, in the middle of coronavirus where people were furloughed. So, there's a lot of this sort of thing, and where a lot of lenders are still have deferments and things like that, so their cash flows drop. So there's a number of issues there like that. That realistically, are they being addressed? Yeah, look, they are being addressed. But I think more importantly, I think this is just normal, and I don't see this as a problem. I don't see this as a, people running out of the cities. I know people are, sitting there going, yeah, everyone's moving out. Look, yes, a certain type of people move out, but there's still a lot of people moving into the cities because they want what the city offers. They want the nightlife, they want the bars, they want the restaurants, they want all that sort of, that life, that vibe. And yeah, right now the vibe isn't that good, 10 o'clock it ends. We've got the 10 o'clock curfews now where everyone has to go and disappear. So yeah. I've got some more calls, I've got some more on YouTube there. So, should I build or should I wait? I'm thinking that it ain't little. Maybe build, my price will be cheaper than now due to recession. Yeah, look, okay, so this is, so should you build? I'm assuming you're talking about development here. I think as long as you price it in the market, and look, as long as you bought the land well, then if you bought the land well and you price it well, then things are still selling. Things are still going to continue to sell. Chatting to a few of the developer buddies I have, larger developers, they're not seeing a massive drop. They're not planning on a massive drop. Yeah. If anything, if there was a massive drop, London benefits from that. London does. Okay. And now with Manchester and Birmingham being word cities, they will too, to a degree. The problem is a lot of lenders now have changed their quantums, in other words, the minimum amount they lend, and so really Manchester and Birmingham are almost placed off the charts unless you're buying something, city centre. London is still fine, but I think what they've done is they've sort of tightened their criteria, and a lot of people have done that. But yeah, I think as long as you build it well, then yeah, I think you can still sell. I don't see this as, for me, this recession is not going to be everything stops, everything dead. I think what's going to stop that from happening is the government will do whatever it needs to stimulate the economy to make sure, whilst we might have a bit of a fall off, that actually it won't be a dead drop. Okay? And I think most countries around, there's almost an unwritten law to say that's how we're going to treat it. Okay? So, yeah. Let's have a look at negative interest rates. So negative interest rates, rates set it out. This is the actual Monetary Policy Committee who makes decisions on that. And I've forgotten the guy's name, Silvana, Tech, you know what? I can't even pronounce it. But basically they've said negative interest rates. Now, my challenge with this is it all sounds great, negative interest rate, and I'm going to get paid for my mortgage. Nah, I don't think that's going to happen. Okay? If you look at most mortgages now, what they say is that they get to a certain margin and then they'll stop. In other words, and they're pretty much at that now, a lot of them. So what happens is, even if they go negative, that just means the margin to the finance company, the bank, is making more. Okay, so yes, it's great for them, but I don't think it's going to flow through to us. It may a little bit, okay, but rates are quite low already. Will that change? But the problem is, for savers and for pensioners and people like that, it destroys their savings, because if they've got cash, that cash is getting charged. They're getting charged to leave the cash in the bank. Yeah, because that's what happens. It's not just about negative interest rates you pay on your mortgage as a property investor, which I don't think will come, as I said. It's about the interest you earn in the bank as well. So we'll see what happens over the next few months. It may be a temporary measure, it may be a 6-month measure. They say, right, we're going to do this to try and stimulate through the winter months, which actually probably wouldn't be such a bad thing. But if you're a pensioner there and you got cash, yeah, it's a hard one, because what do? Do you take it out? Do you put it into something? How long do you put it in for? What risks are there? That's some of the things you got to factor in. So what else have we got? Yeah, the land is mine, I'm building to keep. Perfect. Yeah, well then, if that's the case, the land is yours, and then by all means, the challenge you're going to have is getting the development funding right now, because they have constrained. But if you already own the land, then probably you can definitely get finance for it. That shouldn't be too much of a problem. And if you are having any difficulties, then by all means, give us a call. Sorry guys, I just realised mute was on somehow. So guys, let's talk Brexit. So it's interesting, because the UK are really playing hardball here. Boris, I don't know whether it's stupidity, I don't know whether it's strategy, I don't know. I mean, there's obviously a bigger picture. It's obviously a negotiating tactic, but I find that it's quite interesting. They've negotiated a deal, to come out, and now they've gone, no, we're not going to honour that part of the deal. Which is brave, because if you're then signing other deals, but the way I look at it again, if you look at what most other countries are doing, led by Trump, led by Trump, they don't care what they say, what they do whatever they want. And I think this is the problem now, is that's the world we're living in, where they'll say one thing to get one thing, and then they'll go back on that straight away. Integrity has gone out of politics. There is no, I mean, if you don't like something, you call it fake news. If you don't agree with something, it's like, it's just an amazing, surreal place. I would love to be an alien sitting up in a spaceship and looking down and going, wow, look at these guys. I can't understand. I just cannot understand how they can function. And to some degree, it's exactly how it is. We can't function. We're struggling to function. But so Brexit, we'll see what happens with this internal markets bill and blah, 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 and all that sort of stuff, and what's happening. My fear is we're heading towards a no deal Brexit in principle. Okay, what do I mean by that? And actually, to be fair, I said this, if you go back a year and a half ago, I actually said this, we're being hoodwinked, I think the video was, because I said, actually, we will get a deal, they will get a deal, it will be a no deal, but they will call it a deal, because politically, they can't afford the fallout from a no deal. Yeah. Now, there is some arguments to say that a no deal will be better for Britain, because a negotiation, blah, 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 it'll create some turmoil. I don't know. That's some pretty advanced economics and some, and I don't have the economics, I don't have the economists sitting behind me to do all the number crunching for that. Look, for me, it comes down to this. Brexit was one of those things where it was quite divisive. Foreign butchers and bricklayers needed in the UK. Well, this is the stupid thing about the whole Brexit thing, was that we basically went from a period where we had cheap labour that loved coming over here, and we effectively said, piss off. Shouldn't have said that on YouTube, but anyway, I'll probably get the explicit rating now. We basically said, get lost, we don't want you. You're unskilled, get lost. So now we're paying, I think, 100 grand, or 90 grand a year for a builder, a bricklayer, which is ridiculous. And there's short supply. Not only can we not get bricks, you can't get people to lay the bricks. So if you want to go into a profession right now, bricklaying is quite a good one, all right? So, it's something to consider. Look, do I think you should consider it? Do I think it's actually, a viable option, whatever? Yeah, I think it's a short-term thing until we pick it up. But what it is going to mean is there'll be some house price costs increase. So building costs will go up because of the labour component. But that's going to be something that has been happening for a while. So yes. All right. So I pulled this graph. This is out of the Euromonitor stuff, which I pulled out. Thought it was quite interesting because you've got increasing probability, decreasing probability, which are these sort of up and down squares. And if you have a look, no deal Brexit is on the way up. The probability of that happening. But the probability of that happening is 30%. I don't think it's going to happen. Okay, I think it will in principle happen, but I think we will call it a deal, and they will call it a deal, and it'll be a last minute deal sort of thing, but it'll be a deal. Okay. The other side of it is the next one down, which is 20%, is a disorderly no deal Brexit. Okay, which is 20%. Okay. Now my concern, and when I was looking at this, going, okay, so what we're saying is a disorderly no deal was 20%, a no deal Brexit is 30%. Does that mean there's a 50% chance of a no deal Brexit? Which I suppose on the glory of that, or the flip side of that, is 50% that there is going to be a deal. All right, I think there will be anyway. But some of the interesting things, Eurozone recession 10%. You've got the pessimistic view of COVID-19, pessimistic view 2, and pessimistic view 3. So you've got the different probabilities there. But I just thought that was quite interesting. One of the things I found interesting, because I've been reading a lot of Ray Dalio recently, and about wars and things like that, and really getting into the future casting and where we're likely to head in World War III and all that sort of stuff. Interestingly, global trade war the probability is going down, decreasing. And I think that's because Trump is going out. But without a doubt, and I think most people are saying this, is that America and China are going to be at loggerheads for the next 30 or 40 years. The next Cold War is going to begin, and the actual wall won't be a cold wall, it'll be a firewall. It'll be down the lines of information technology. And it may be that you've got to choose whether you use WeChat or WhatsApp, whether you go with China or America. Pick your sides. And that's one of the things that was interesting. I was chatting the other day about Singapore, because obviously being in Singapore, we are very much both sides. We're sitting squarely on the fence. And the question is at some point, they're likely going to have to make us choose, or we're going to have to choose which side we sit, because America won't allow us to sit on their side if we're courting China, and China won't allow us on the other side. And a number of countries do that. I mean, Australia, interesting, I'm an Aussie, and Australia has squarely gone down the route of America, which, wow, their trading partner is there, but their military support is America. So that's happening. But the other side of it is the US-China all-out trade war. That's gone from 25%, and it's decreasing. We'll see what happens if Biden gets in. I think regardless of who's in, the trade war is going to continue, without a doubt. Okay, so that's just something to be thought of. Cool. So Brett's rant for today, or for this week. Look, I thought rather than have rant today, what I want to do is I just want to go and really get down and dirty with what I mean by fundamentals. You hear me say it all the time. Okay, so let's have a look at it. So property fundamentals. All right, now, first of all, I read it this way. I say shop, skills, transplanting to major employers, major investment. But actually, if you look at what has the highest impact, it's major investment in an area. It's then major employment in an area. It's then transport links into and out of that area. It's then schools. It's then shops. And they are the components of good, solid fundamentals. So the lowest impact is shops. The highest impact is investment. And when we really get down and dirty, and therefore, and this is what I find interesting, is having good skills is great, but actually major investment, and this is one of the reasons why my strategy for a long time has been all about regeneration and getting into those areas where there's massive money and massive regeneration spent. And it's worked incredibly well for our clients. And we've repeated it 8 different areas now, and we're currently doing it. It depends on which area you're talking about, whether you're in Manchester or Birmingham or London, where we're talking about, and we shift over time, but that's all part of the parcel of it. And I think the key here with the fundamentals, and forget about my strategy, because you'll have your strategy, but by all means, if you're not sure of a strategy, or you just feel like you're being bombarded with opportunities, speak to the team and tell them, hey, help me work out a specific strategy that meets the current market and the market over the next 2 to 4 years. Okay, that's the reason why I'm doing these sort of things and this, these graphs and that, because I want you to be able to pick a strategy that meets the market in the not only the present market, but the upcoming market. Yeah? And that's part of it is. Now, why do I talk about fundamentals? Because if you're looking to buy right now, if you've bought, not a lot you can really do. One of the key things with fundamentals is you personally can't change the fundamentals of an area. All you can do is change the fundamentals of your individual property, and in some cases maybe the internal of the property, and that's it. Yeah, and that only allows you this much wiggle room in pricing and that sort of stuff. Yeah, because a 2-bedroom is worth that range, whereas an area can go from 2-bedroom that range to 2-bedroom this range through massive investment. Okay, so the reason I talk about fundamentals, the reason I say if you're looking to buy now, go for the best fundamentals, is because they are the places that bounce back first. They bounce back biggest. Okay, and when you get that, you'll understand that, you know, if you're buying based on that criteria above all else, yeah. So investment in the area, employment, transport links, shops, and schools and shops. Sorry, other way around. You know, that's what you need to be looking for, because that's what's going to mean that it will bounce back and prices will start growing again. Because in a lot of cases, what you're hedging against, look, prices may do a little bit of drop and come back. Yeah, they may do a big drop and come back, but you want to be the person that's leading the way out, whatever it is. Whether it's this, in other words, no dropping out, or whether it's a little one or it's a big one. And the way you do that is by buying with the best fundamentals. So I'll leave you with that this week, guys. Any questions you've got, please send them through. Sorry, I missed a few questions at the start, or I got them in the end, but that's okay. But yeah, any other questions, guys, please send them through. And if not, then you've got webinars at gladfish.com, and I can answer those questions whenever. Otherwise, be sure to subscribe, be sure to comment, and I'm happy to answer anything. Until next week, have a fantastic week, and I'll keep you updated. Any questions you've got, send them through to the team, send them through to myself, and we're happy to answer them, happy to help you get a strategy, and happy really to help you build a UK portfolio, so effortlessly done for you. And that's really what my passion is and what we're about, and and everything we do is all about doing everything for you, everything an property investor needs, to build a UK portfolio. So guys, have a fantastic week. Talk to you later. Bye.